Okay, welcome everyone. Let's get right into the stock market technical analysis, figure out what's going on, where the opportunity lies. So guys, if you're new, drop me a thumbs up. And also if you're interested in learning about this skill set, take my course, link in the description below. Okay, triple Qs. We've got we got some movement today. There is obviously a little bit of a battle going on. You can see just today in the hourly chart, I'll flip it over here. We kind of started to make it look like we're going to break the most recent lows, which came from February 24th. We're looking for a break of those lows, and the buyer stepped in, ran it up to the near-term resistance level. Right now, it's about 332.77, and then it sold off, selling off so far. So if you look at the daily chart, one of the key things I want to point out, and we're below it right now, doesn't mean we have to remain below it, but this is your bull market trend for triple Qs, the tech stock. Nice clean channel, and it was like this for, since 2008 basically. But you can see the top of the trend line comes in right here. So we broke it here on this day, but they stepped in and recovered it. Today, they made it look like they were going to do the same thing. We broke it yesterday, and today started to break down. They stepped in, made it look like it was going to recover, but so far the sellers have stepped back in and they're selling it down. So it's anybody's game still. We're still kind of battling it out right here. And we've got these most recent lows. We take out the lows, and it's going to be pretty obvious, I think, at that point that we're going to have pretty impulsive selling down to our next target of about 300 on the triple Qs, which is where I think this is heading. So again, I'm just positioned short. So far, we are in a downtrend, and we are continuing that downtrend. IWM, small caps, still flagging out, basically. You can see that we've just been kind of bouncing within here, chopping around, creating this flag. We've got a flag pull, which is about right here. And then there's our flag. And if you project the breakdown of the flag pull, it's really putting us at that target of 170, anywhere right in here. So that's where I think we're heading. Likely going to, resolve to the downside soon, maybe this week. And we could be down at this 170 area by the end of the week. And the S&P 500, again, we got to take out those lows. Right now, I've got them kind of marked out at about that 410.74. We run down, start breaking those lows. We should head down to the next level of support, which is about 400. So not too much farther down on that one. Still haven't taken out the lows, so we'll see how we resolve today. I don't know if they're going to break them today, so we'll just continue to watch this. One thing I do want to point out, though, I think it's just important to really understand. On the weekly chart, on the S&P 500, this is your bull market. And you have to realize this bull market, since the Great Recession lows of 2009, 2008, basically the Federal Reserve has been involved heavily for the entire time. And here's your bull trend. This is the bull market. The Fed was doing QE. Now, in 2018, we broke trend. The Fed instantly came in. Remember, on Christmas Eve, they came in and cut interest rates and reverse course. They were hiking interest rates at that point, and they were starting to reduce their balance sheet, and they did a 180. All right, so then they pumped the market up for 2019. Then again, we ran right into resistance. COVID hit. The Fed cut interest rates to 0, and they did even more QE. Now we've got massive inflation. The Fed is at 0% interest rates, and their balance sheet is at, $9 trillion or something crazy. And we are breaking this trend again, okay? So that's the point I'm trying to make. Each one of these breaks of this bull market trend have been followed by Federal Reserve stimulus. And, so maybe the Federal Reserve will come in and do a bunch of stimulus when we have, really high, massive inflation. But I think it's not probable, all right? I think it's more likely that the Fed is out of tools to help save this market, and it actually is going to go into a bear market, all right? Again, we would have been into a bear market right here. This is where we broke our bull market trend back in 2018. Again, it wanted to go into a bear market again, and during COVID, the Fed wouldn't allow it both of these times. This time, what happens, But as of right now, the Fed's saying they're going to hike interest rates. So SOXX is the semiconductors, a little bit of a bear trap today. We'll see if that actually plays out and where the day closes. But you see here on the hourly chart, we've got some support right here. You know, this is the level to watch, 433.34. And you can see yesterday they broke that level, but today snapped it right back up. All right, so we're above that level. And, you know, that's a little bit of a bear trap. When I look across some of these other individual semiconductors, what I think is going on is this is kind of a bear trap, counter trend, shakeout move, and then we're going to roll down and break and continue to roll. So TSM, we'll give you an example. So TSM, Taiwan Semiconductor, here's your key level to watch, and it's right there at 108. All right, we broke that level, a little bit of counter, a little bit of a bounce today, but nothing really major, and we're heading back lower already. So ultimately, there's no technical damage done to this chart, so that's why I think SOXX is likely going to continue to roll over. Qualcomm, another semiconductor, below the 200-day moving average. We've entered the gap now, so the gap on this is 153.35, and we're just below it, but we've entered the gap, and typically when you enter gaps, they fill, all right? So that tells me that we have a high probability of rolling down and filling this gap. Okay, so that's the next target for this one, 138. You know, it's about 139. Okay, gold. So gold ran up and hit pretty much its all-time high today at 2070. It looks like was the top. So not quite the high. I think the high came in about. Let me go to the hourly chart just to confirm. The high was right. Well, never mind, guys. It was about 2100, so basically pretty close, and that makes sense that you get a pullback on that first tag of the high. You know, you run up, that's a double top, so typically you're going to have sellers waiting up there at that high, waiting to sell. So it makes sense that we might be due for a pullback in gold and the gold miners. I'm looking to buy the dips. So again, this thing's gone pretty parabolic, so it would make sense that we take a breather, get a nice pullback, maybe down to this 1960. I've got this trend line maybe to watch here, but ultimately this thing's probably due for a breather or some sort of a minor pullback to support, and then we'll continue higher. So buy the dips, that's what I'm looking for on these. Okay, oil is going parabolic basically. It's actually kind of scary really to see oil doing this, going straight up. We'll see how much more this has to run. I'm not interested in shorting this at all. If I was long, I would just remain long, but recognize that it is going parabolic, and typically these moves come crashing down as equal, kind of an equal amount that they go up. So we don't know when this is going to end, but we're continuing to run higher. And that's all I see really on oil. Also, if oil continues higher, it could potentially start to affect the gold miners, because that's one of their major inputs is oil. So again, you know, here's GDX. We ran right up into resistance right here at 40 bucks. That's kind of a level I've had marked out. We popped right into it. It makes sense that you're going to have a pullback into resistance. So, you know, you can treat this one of two ways. You can, you know, take profit into resistance and then maybe buy on pullbacks to support. I don't see any negative divergence on the daily chart. Now, if I look at the hourly, we're probably going to start to, it's not even there really on the hourly. So tells me we still have some more to go to the upside. Although we do have this trend line to watch right here. So if we get a pullback to that trend line, and it happens now, it's actually going to be a pretty healthy pullback. All right, just a pullback, hit support, and continue to move higher. All right, so that's what I'm thinking is going to happen on these miners. PANW, you can see more selling today, down another %, just continuing down towards our target. So ultimately we shorted it up here on March 1st. We're heading lower down towards the target. Again, I'm looking to take profit and cover my short on the initial tag of this trend line. This trend line comes back from, you know, really started back in April of 2020. All right, so I think you're probably going to get a reaction when you hit that trend line bounce. I'm looking to take profit, and then I'll re-short this thing on a break of the trend line. That's what I got all these squiggles for. Okay, GPL, I talked about this one. This is that penny stock. Again, we entered the trade Really back here on March 1st, everything looked good. It was ramping up, looked like it was going to run and fill that gap right there at 36 cents. And you can see there, if I go to the hourly chart, pretty much right there on the penny, right on the button. So I covered and I closed this trade out today. I saw that it was up 20% in the pre-market, so it looked like it was going to run and fill that gap, and that's exactly what we got. Closed the trade out, and that one, so we're done with this one at this point. But that was a gain of about 60% in a matter of, a week, basically. Right, so that's that trade. Moving on. And XLF. So yesterday we broke that key level of about 37. All right, we were holding that for quite a while. Support there, support there, support there. And if you were watching it yesterday, you could see that yesterday they were really trying to hold that level, and they did, the day before, and then it broke that level. And today they're just, they kind of tried to rally it up, and that gets sold into. So that's what you should expect until we see a technical change in the market, that rallies should be sold into, and it's a sell the rip market. All right, so we're continuing to look for opportunities to add to short positions as the market rallies into resistance, and we look to cover our short positions as we fall to major support. XLF's support level right now is about 35, so we're probably going to head down there maybe today or tomorrow, at least this week most likely. And then we have another level of major support on this ascending trend line right here, and that's about 33.80 or so. So that's what we're looking for on that. I'm really keeping an eye on these semiconductors like AMD and Broadcom just to see if they start to break. They've been one of the stronger areas of the market. So I'm looking for some of those strength areas to break now. We've seen the Cathie Wood stocks really break. They've all been decimated, and it's stocks like Apple and the semiconductors that are just kind of starting to roll over. You'll see Microsoft, basically flat today, but again, below our resistance level. That was 282.64. You can see it was support here, we bounced there, and they tried to bounce it today, but so far back below. So we'll see where we close. Obviously, the day's not over yet. They could ramp it up and close it right there. Apple pretty much flat today. We need to take out the lows and the 200-day moving average. You're going to want to see that, a break of that, in order to really get the market to sell off. You're going to need to see Apple probably break its 200-day moving average. Amazon kind of, hanging out near these lows, still trying to hold these lows right in here. We'll just mark it out at about that. So you can see we're still trying to hold on to those. I think those are going to go and break to the downside. Doesn't mean it's going to happen today. There's obviously the opportunity for another counter trend rally. So we don't know exactly when that's going to break, but it does look like over time this is going to continue to break to the downside. Here's Amazon on the weekly chart. You can see all the levels of support. There's your breakdown, your sell signal, your back test of the trend line, and we're starting to roll over. So we get a weekly close below, these lows, and it's just further confirmation that we've started a downtrend. Okay, I don't see any real support on Amazon on the weekly chart till we hit about 2,042. So that's quite a ways down there. From where we're at right now, that's about 26%. If we got that, it's going to be probably a pretty swift move down, and we'll probably be looking for the first bear market rally down at that level in Amazon. Amazon would be in a bear market at that point in time. As of right now, Amazon's technically in a bear market because it's down 27%. Down here, it would be down, about 45%. So you'd probably look for your first pretty impulsive bear market rally at that level. Okay, guys, that's all I have for right now. So I'm going to get this out there, and we'll just see what happens as the day closes out. Catch you on the next one.